When the market goes up, you go up. When the market goes down, you don't go down. Save Money Radio, your money safe and sound.
Welcome to Safe Money Radio with your host, Brad Pistole. Brad is a retirement and income specialist, primarily serving Springfield, but he's sought after nationally for his expertise in helping people secure their retirements. Mr. Pistole is a licensed life insurance professional in the states of Missouri, Arkansas, and Kansas, and he specializes in working with people who are near retirement and those who have already retired with wealth management, income planning, and asset protection strategies.
Save Money Radio, your money safe and sound.
And now, here to talk with you about securing your retirement, your host, Brad Pistole.
Hello, this is Brad Pistole, your host, welcoming you to Safe Money Radio. I am an asset and retirement protection specialist and your one-stop source for capital preservation and strategic income planning. Well, hello everyone, and thank you for joining us today. You might be watching on YouTube, you might be listening on a podcast, or you might be listening on Safe Money Radio. As you know, over the years, I've been hosting Safe Money Radio for about 13 years now, since 2010. And I've had a lot of different guests on the show. I've had Ed Slott, Tom Hegna. Today, I have a very special guest. Heather Schreiber is with us today. And I'm going to share a few things with you about her. I'm just so thankful for her being on the show. But then I'm going to let her tell a little bit about herself to you. So Heather is the founder of HLS Retirement Consulting in Woodstock, Georgia. She's frequently asked to speak at all types of events. She's on radio, TV programs, webinars. She's been featured in USA Today, Forbes, Market Watch. You've seen her all over the place. And so I'm super grateful to have her with us today, especially because we're going to be talking a lot about Social Security today. And she is the creator of Social Security Advisor, which I personally subscribe to. And I'm going to talk to you more about that later. But before I talk too much, Heather, thank you so much for joining us today.
Thank you for having me, Brad. It's a pleasure to be here.
Well, I tell you what, I know that, of course, I've known you for years, and we have a lot of things that bring us together. Safe Money Radio, Aegis Financial, the Ed Slott Group. We've spoken at a lot of the same events, and so we've known each other for years. But I know you dabble in a little bit of everything: retirement income planning, IRA distribution planning, Social Security planning, annuity taxation and structuring, IRS reporting, legacy planning. The list just goes on and on. It's exhausting, all the different things that you focus in on. So do us a favor, especially to our listeners who aren't watching. Tell us a little bit about yourself, what it is that makes you do what you do, and what it is that you're passionate about.
Yeah, you just spoke my love language. All of those things are my love language. So I have been doing all of those things. They get me excited every day. We can both say we love what we do for a living, and been doing basically all of those things that I've been specializing in for 28 years. And
Wow.
being, that I'm 21, I don't know, that's kind of confusing, isn't it?
Exactly.
So I've spent my whole career helping advisors just like you and do anything and everything to do with retirement income planning. And yeah, it runs the gamut of all of those topics. So I just love helping financial advisors and sometimes CPAs and attorneys really dig deep into those areas that can often be confusing, but yet they're so important when they're helping clients navigate those waters. And let's face it, it's confusing waters, and it's important, and all of those things that go into those planning areas. So
absolutely.
So I've made a business out of it, and I absolutely love it.
Well, and we're going to be talking about some of those confusing areas today. So let me ask you this. I noticed that there's all kinds of designations under the sun. I'm in a designation program right now that you've already completed. You are an RICP and an NSSA designation. So explain what those are. What does that mean?
Yeah, so the Retirement Income Certified Professionals through the American College. Believe it or not, I was one of, I think, the first 200 that got that one.
Wow.
And that is, I highly recommend that one. That is one that I feel like, there's a lot of designations. I highly recommend anything that has to do with the American College. Wade Pfau and Steve Parrish. Those folks were highly involved in the development of that curriculum.
Yeah.
But it's really something that I think for anyone, but financial professionals that are really looking for something that will kind of get right to the point of retirement income planning. I think that is one that is a little bit more palatable for folks that want to get something that isn't as long as some of the other ones, like CHFC and CLU. So I got that one back when it just came out. It came out in, I think, 2013, and I had it by January 1st of 2014. So I highly recommend that when it goes into, Social Security. Back then, it was a lot more in depth in terms of the claiming strategies that could be used. So there was a lot more to it, although Social Security is still every bit as confusing today as it was then completely. So I know the curriculum has changed, but still every bit as confusing. But it's just a really, really amazing designation. And then the other one, National Social Security Advisor, NSSA, is another one that, I tend to really have a passion for Social Security planning, because for most American retirees, that tends to be sort of the groundwork for retirement income. And so NSSA is a designation that specializes in primarily for financial advisors and CPAs, if they want to get into the digging deep into understanding those benefits. It's a designation that just is really designed to dig into the layers of that, understanding eligibility and understanding how to calculate benefits, really being able to help consumers understand. And it's really, not everyone wants to do that, but I say that there are certain things that advisors should be able to understand. How is my benefit calculated? That's a pretty powerful thing to be able to say you understand. And it leads to a more holistic discussion around, does it make sense for me to continue working or not? Well, if you understand how that calculation is done, then it really adds value to that conversation, value of you to that person, because understanding that there's 35, the highest 35 indexed years of earnings goes into that. If you're talking to someone who only has 25, would it make a difference for them to continue to work to close that 35 years? Sure. So that's the kind of thing. So I highly recommend that too for those advisors that are really looking to bring that scope of knowledge into their practice. And consumers are really craving individuals to help them, because Social Security Administration, they are simply designed, the representatives there are simply designed to help take a claim. They're not designed to give anything that looks like advice. In fact, they're prohibited from doing that. And so I'm finding more and more situations in which consumers are coming out of there frustrated, because they're like, I don't know what to do. In fact, some are getting misinformation, and I don't know if it's because the representative doesn't know the information, or it's that they're having a breakdown in communication. So they really need advisors like you, Brad, that can help them bridge that gap. They really need it. So
we had a great question yesterday that came from a client of ours that called in. Mm-hmm. I'm going to talk about it later in the show, and I'm going to tell you what happened and ask why it's important to work with someone like you. So if you're listening right now, of course, a lot of you are watching, but if you're listening on Safe Money Radio, we're going to take a break, and we want you to know we're going to be talking about Social Security planning with Heather Schreiber, Social Security expert, after the break. We're going to go into some specific details, ask some specific questions. But if you're listening to the show and you want more information, just call anytime, 866-780-SAFE. That's 866-780-7233. If you've listened for a long time, I give a copy of my book out to everyone free, Bulletproof, the Safe and Secure Retirement Income Plan, with foreword by America's IRA expert, Ed Slott. And we're going to talk about the importance of Social Security claiming and other forms of pensions and guaranteed lifetime income. So call in anytime, 866-780-7233. There's always someone standing by to take your call. Well, I must take a short break. This is Brad Pistole, and you're listening to Safe Money Radio. Let's pause for some exciting announcements.
Brad Pistole recently completed the Retirement Income Certified Professional course through the esteemed American College of Financial Services. This elite financial designation sets Brad apart as an expert when it comes to asset preservation and lifetime income planning. The RICP program focuses on key retirement decisions like building your retirement portfolio, evaluating the various retirement risks, choosing the appropriate strategies for turning assets into income, choosing the appropriate time to retire, helping clients maximize their Social Security, choosing the appropriate annuities for your retirement income plan, choosing the appropriate tax-compliant distributions from tax-deferred company plans, choosing the best Medicare health plans for the retiring client, choosing the best way to deal with long-term care in retirement, ethical issues in retirement income planning, and managing the appropriate strategies for taking lifetime income. If you're concerned about the safety of your money, and if you want to make sure you have guaranteed lifetime income you can never outlive, make sure you're working with a retirement income certified professional like Brad Pistole. For a free financial consultation, call us anytime at 866-780-SAFE. That's 866-780-7233. When you meet with Brad, he will give you a copy of his best-selling book, Bulletproof: The Safe and Secure Retirement Income Plan. That number again to call Brad is 866-780-SAFE. That's 866-780-7233. You're listening to Safe Money Radio with your host, Brad Pistole.
Welcome back to Safe Money Radio. I'm Brad Pistole, a certified financial fiduciary and a safe money retirement specialist. So, okay, Heather, we've known each other for a long time, and one of the areas and places that we met was because of this guy right here, Ed Slott. And here's his national newsletter. I've been blessed to write for him several times over the years, but I noticed that also this young lady right here who's joining us today, yours looks a lot like his. So tell us how that happened, how it came to be, and how would someone get access to your Social Security Advisor newsletter?
Yeah. So Ed, I am so honored to know him as well. Ed, I've always admired him long before I knew Ed. I always watched and read his stuff long before I knew him. And we ended up knowing each other. I probably knew him long before he knew me, but somehow I got involved with helping edit some of his Social Security information for his content, his books, and so forth. And so out of that came a relationship. And through that, through him and through Ryan, they said, hey, what about, Ed said, he's got enough on his plate. The man's a genius, but he said, Social Security isn't going to be one of the things that I ever want to put in that genius cap.
Right.
And so we started talking about, he said, would you ever be interested in doing a Social Security version of IRA Advisor? So when Ed asks and Ryan asks, I said, wow. And so that's how that relationship came to be. And so I can't say enough about that partnership. I can't say enough about Ed. He has been an amazing mentor, and he's been a cheerleader of mine
he's
since the beginning. I mean, I have had my business for going on, I guess, 6 years now, and Ed's been a cheerleader along the way. Before that, I was always working for, another company, and so I went out on my own, and so I can't say enough about Ed. So Social Security Advisor is a companion newsletter to IRA Advisor. Okay. And it looks, if you're familiar with IRA Advisor at all, that has such incredible information about IRAs and planning techniques. Social Security Advisor is like it, except that I use feedback I get from consumers. I mean, consumers sometimes reach me. They might read something I've written in USA Today or whatever, and they'll somehow reach out to me and ask questions.
Yeah.
But my day-to-day is helping financial professionals. And so they give me the materials. What are the sticking points that they're hearing from their clients? And so that's what I write about. It is the most amazing thing because I get, I never have to think of a topic because I'm getting the topics every single day. And so what's fun is I have an advisor mailbag section. So I get questions day in, day out, and I get to share those with subscribers. So how do people get it? They go onto IRAhelp.com, which is Ed's website.
Perfect.
And it's right under the newsletter section where Ed's is as well. So we're going into our third year. And it's just fun.
So they can go straight to Ed's website, www.irahelp.com. And then under the newsletter section, they'll see Ed's, but they can subscribe to yours right there.
They sure can.
It's exactly how I did it. So I want to share something. So especially for those that are watching, I know those are listening can't see it, but I've focused a lot on what you wrote back in May, but in July, this is a great example, I think, of what Heather's talking about today. You did something in December, and then you kind of circled the wagons back here in July. And so I know a lot of times advisors, guys like me, we're coming across all these situations with our clients, how to file, when to claim, the best planning strategies. And so we have all these types of questions we come across, and then we bounce them off you. And I was just looking here in the July Social Security Advisor newsletter. I have a freeze on my credit. Will I be able to open my Social Security account? I have an online account, but I'm having trouble getting into it. How can I access my account? Can I file for benefits online, including Medicare and Social Security disability? And then I love this question because I've just gone through this with someone. My spouse and I are trying to decide whether to take our benefits early. She has earned enough work credits for retirement benefits, so she would claim spousal benefits under my record. I've read that the reduction formulas are different for retirement and spousal benefits. How can I figure out reduced benefits? And you go into all that lovely information about all the different formulas that are there. And so on a typical, if someone signs up for this, they're going to get your newsletter all 12 months, correct? They're going to get to see all this information. Yeah.
And if they do an online version, just like Ed's, you get all of the back issues too, which is great because in December, we do we show you basically all the back issues. Where can I find information about X? And I do love those. The frequently asked question ones that are direct from the consumer audience. Yes. I love because it's the questions that I get over and over again. Help me understand, can my spouse file just for spousal benefits, hold out on taking his or her own, or I don't want to file yet, but my spouse never worked long enough. Can my spouse file? Those are the questions that come up. And so I love doing those frequently asked questions direct from consumers. Those are great ones. I always have.
I'm going to ask you a couple of those specific questions after this break. So if you're listening right now and you want Heather's information, if you want to subscribe to her Social Security Advisor newsletter, just go to IRAhelp.com and you can sign up for it right there. And if you're listening to the show and you want more information you can call me about how to get in contact with Heather. You can come in for a free financial planning consultation, and we will, as part of that process, talk about when and how to file for Social Security in the best way. So just call in anytime, 866-780-SAFE. That's 866-780-7233. And there's someone standing by right now to take your call. This is Brad Pistole, your host of Safe Money Radio. I'll be right back after this informative message.
If you were born between 1946 and 1964, you are part of an unprecedented generation of 76 million Americans known as the baby boomers. Have you taken steps to secure your retirement future with options to limit the loss of your principal retirement funds from market risk while utilizing key tax advantages? Why not ease the burden of transfer of funds to your heirs and insulate your money from the shocks of an increasingly volatile world economy? Give yourself and your family peace of mind and certainty that your retirement funds may have the opportunity to accumulate without the risk of market loss. So call us now at 866-780-SAFE. That's 866-780-7233. It's time to start being safe. Now back to more Safe Money Radio with your host, Brad Pistole.
Welcome back. I'm Brad Pistole, your host of Safe Money Radio. I am a capital preservation and strategic income planning specialist working with clients right here in Springfield and Ozark, Missouri. So, okay, Heather, I know there are there are myriads of questions regarding Social Security. As a matter of fact, since my son and I are in the RICP training right now, I'm about 2/3 done. This is an example. Here's the course manual for Section 1, Section 1 of the RICP. And in Section 2, there is a very, very in-depth section on Social Security planning, as you know, about half the size of that manual just on Social Security.
Yeah.
So it's been pretty incredible to gain all the information. You know, Ed will always say, you don't know something until you find out that you didn't know it. And then you're like, I didn't know that, you know?
Right.
So you get into it thinking, man, I know quite a bit about Social Security planning. I've been giving advice regarding it for years and years and years. And then you go through this and you're like, whoa, I did not know that. And that is critically important for my clients and for those listening and watching. So I want to ask you about one. We're going to do a couple of different topics here, but one of the biggest things to impact our world right now, of course, is divorce. It's
Yeah.
huge. It's prevalent. So how important is knowing the right information regarding Social Security income planning when it comes to divorce? Are there different options out there? Is there more than one option when you go through a divorce? What does it have to do with Social Security planning?
Yeah, so I'd say that there are definitely misses when it comes to divorce. The first thing, and the rules have changed a lot since there was something called the Bipartisan Budget Act, which happened in 2015.
Yeah.
There were a lot more options, I'd say, before that. There were some claiming strategies that even allowed ex-spouses to take some sort of crafty opportunities. They've gone away for the most part. But what I would say with ex-spousal benefits, first of all, marriage at 10 plus years. So if you were married for 10 years or more before divorce, then we have something to talk about.
Sure.
Okay. So that's the critical component. So I always ask people, okay, how long, were you married and divorced? If the answer is yes, you always want to ask how long that marriage or marriages last. I mean, people are getting married multiple times. So you always want to know how long they were married. The other question is, did you or do you have a retirement benefit of your own? If the answer is yes, then if your former spouse, if your former spouse is still living, then really what it comes down to for most is that the only way you're going to collect, and this is the basic question, the most common question, the only way you're going to collect an ex-spousal benefit from your former spouse is if it's greater than your own benefit.
Right.
Okay.
Right.
That's the biggest question. So during lifetime, the maximum spousal or ex-spousal benefit, again, assuming you've been married for the 10 years or more to that person, and you're currently unmarried, it's going to be 50% of their benefit at full retirement age. Okay. That's the maximum. So let's say that you have your own retirement benefit that's estimated to be is roughly $1,350 to $1,400 or more at your full retirement age. Okay. If that's the case, then the chances of you collecting a spousal or ex-spousal benefit is probably slim to none. And that's because the maximum full retirement age benefit right now is it's not going to allow you. Your own benefit's going to be higher than any other, than the ex-spousal benefit.
Right.
Okay.
Right.
So that sounded really confusing. I've had too much coffee. But the point is that, there is an opportunity there. Now, if you said I was a caregiver at home and I had small benefit, then yes, that's something you need to talk about.
Of course.
But here's where most people, Brad, miss an opportunity is. Then the second question is, okay, you were married for 10 plus years to this person. Are they alive or have they passed? And if they've passed, that's the critical one.
Why
okay?
is that?
Because now we're dealing with a much higher benefit, number one.
Right.
Because in survivor world, we're not capped at 50% of a full retirement age benefit of that person. Now we're capped at as much as 100% of what they were collecting at the time of their death or entitled to collect. So 50% or 100%. So if that person had waited until 70, for example, and was collecting, let's say, $3,000, $3,500, $4,000 even. Now that's what we're dealing with.
So if you were
Okay.
married for 10 years or more, and it can't be 9 months, can't be 9 years, 9 months, it's got to be 10 years
It
more.
has got to be 10 years.
Right.
And the other thing is you have to wait. And so if you're for ex-spousal benefits to be paid during lifetime while that former spouse is still alive, remarriage at any age is going to stop those benefits. So even if you were collecting them for a time and you remarry, they will stop.
Right.
In survivor situations, if you remarry, but you wait until age 60 or later, that's the critical thing.
That's the key.
60 or later, not 59 and 11 months.
Right.
60 or later, you could still claim a survivor benefit from that former spouse.
And that can be huge when it comes to retirement income planning.
So here's the thing, and I hate to even say this to people who are going through losing even a current spouse.
Sure.
If I'm working with an advisor that has a young widow or widower, if they say, they've just lost their spouse at 50, and now this applies uniformly, not just to ex-spouses, but currently married spouses who lose their spouse. They're in their 50s, if they're in their whatever, I will say to them, I know this isn't what you're thinking about now.
Yeah.
But if you remarry, wait until 60 or later, because you can collect a survivor benefit from your first spouse as long as you don't remarry until 60 or later. And that is huge because of the amount that they can collect.
It can be absolutely change their retirement planning completely.
Yes,
we're talking about, it could be $1,500 a month for the rest of your life.
Or more. I mean,
like you said.
So these are the things I'm talking about. Like when you say, what do they miss? I mean, these are the things, survivor benefits, particularly for former spouses and even currently married. They don't realize the benefits that are missed. And if they go into Social Security expecting for someone to help by asking the right questions, it's not going to happen.
Not going to happen.
And so you really need to work with someone who knows the questions to ask to uncover the benefits.
Someone like Heather that's doing this all day long, every single day. That's why you need to sign up for her newsletter. Or you can, again, call into our show, call into our office at any time. We can connect you directly to her. 866-780-SAFE. That's 866-780-7233. What our entire career has been about connecting ourselves first and then our clients to the best of the best of the best. That's why I'm great friends with America's IRA expert Ed Slott. That's why I've interviewed Tom Hegna on the show, a retirement income planning genius, a great Social Security person, Heather Schreiber being on the show, just a world and wealth of knowledge when it comes to Social Security and income planning. You don't want to make a mistake at any point in life, but certainly when it comes to your lifetime guaranteed income. And Social Security is one of those key things. There's really only 3 forms of guaranteed lifetime income: Social Security, pensions, and annuities with income riders or lifetime annuities. So you want to make sure you get as much of that as you can. So if you want more information, call in anytime, 866-780-7233. We'll give you a free copy of Bulletproof, the Safe and Secure Retirement Income Plan, with forward by America's IRA expert Ed Slott. Hey, you may even get one signed by him, like this one right here, while supplies last. So call in anytime, 866-780-7233. There's someone standing by right now to take your call. Since I have to take a break, now would be a great time to call me for a complimentary copy of my best-selling book, Bulletproof, the Safe and Secure Retirement Income Plan. And I'll also give you a copy of my Safe Money Kit. My number is 866-780-SAFE. That's 866-780-7233. Isn't it time to stop exposing your retirement to market risk? You're listening to Safe Money Radio with Brad Pistole.
Is your money sitting on the sidelines in a CD, savings account, or money market account earning next to nothing? If you have money in a bank, the value of your money is getting destroyed by inflation. Don't let low interest rates get you down. How would you like tax-deferred growth potentially 2 to 3 times higher than what banks offer? Why let a bank pay you next to nothing when you can get 5-year fixed annuity interest rates of over 3% and 3-year rates close to 3% tax deferred? Some fixed annuity contracts even let you access as much as 10% of your account balance, surrender penalty free. Call us now for your short-term money solutions at 866-780-SAFE. That's 866-780-7233. Fixed annuities are backed up by the claims-paying ability of the issuing life insurance company and are not FDIC insured. We have software to help you choose from hundreds of highly rated life insurance companies. Call us now at 866-780-SAFE. That's 866-780-7233. Now back to more Safe Money Radio with your host, Brad Pistole.
Thank you for tuning in to Safe Money Radio. I am Brad Pistole, a market risk mitigation specialist helping clients with retirement money preservation and income planning. Now, friends, if you're listening to us today, I have a very, very special guest with us. Heather Schreiber's with us. And Heather, we were talking about questions before the break, specific questions, divorce planning for Social Security planning. Let me ask you this. I had a client call in yesterday, and Lisa says, "Hey, Brad, I know you're busy. You've got to take this call. It's a Social Security question." I thought, great. I'll probably have to call Heather, but here's the question. She said, "Hey, my husband's going to file for Social Security tomorrow." And I said, "Well, how old is he?" And I've known these clients for years. They have multiple accounts here. She said, "Well, he's 62. And I said, "But isn't he still working? He hasn't retired and not told me, right?" "Yeah, he's still working." "Well, why is he going to file for Social Security tomorrow?" Is this something that you see that's common? You have a 62-year-old, they're still working, high income earner. She's already taking her Social Security benefit. Why would that throw up a red flag to me as a financial professional? A 62-year-old, they've got the right to claim at 62. So I know a lot, you hear this all the time, I'm sure. A lot of the times the thinking is, hey, I can claim. Why shouldn't I claim? I'm 62. Let me go get my money. Why do you see that as a red flag? I'll tell you what I told them later, but why would I tell them you might want to think about that before you file at 62 while you're still working when your spouse is taking their benefit?
I hope that you told them the right thing.
I hope we're going to find out.
So yeah, and this is more common than I care to admit. In fact, when you were describing that situation, I'm working on a situation right now where the same thing happened.
Okay.
In fact, the particular client in this case went to Social Security, and Social Security let her file.
Of course.
And just told her that she would pay taxes on the benefit because she was working.
Okay.
And same exact situation. Now, in this situation, he's a high income earner.
Yes.
And so what should have been told to him is there's something called an annual earnings test. So anytime someone who continues to work and wants to file for benefits before full retirement age, they're subject to a certain amount of earnings, and this is earned income.
Right.
Okay. They can only earn so much before Social Security starts to withhold benefits from them. And so, for example, in 2022, for someone who's under full retirement age for the whole year, as in the case of this person, to the extent that they earn more than $18,960, which is as a high income earner, any amount of income, whatever that amount is, if it were $50,000 over that threshold, then $1 is withheld for every 2 over that limit. So in my example, if there's $50,000 over that amount, then $25,000 of the benefit is going to be withheld. Well, if this is a high income earner, I suspect that if he told them that were the case, they would say, come back later, because they would essentially withhold all the benefits. Right. Now, what happens is sometimes there's a disconnect and it isn't communicated. Somehow there's a miss. And so that's what happened in this case that I'm working on right now. This lady, fast forward, it was missed. This Social Security rep didn't tell her.
Wow.
And they knew up front, but didn't tell her. And so when the IRS communicated with Social Security the next year, she got a letter that said, we paid you too much. Now send us a check for $15,000.
Wow.
Because what should happen is that Social Security should tell them in advance, you make too much money, so we're going to withhold X amount of months of benefits. That's what happens. Now, in this case, it sounds like, I don't know how much you made. They probably would have just said, you make too much money. It's going to wipe out all of your benefits.
Right.
So what happened?
Well, that was the advice. We talked about the earnings test. We talked about the withholding $1 for every $2. And then the other one is, hey, and every situation is different. Let's say two spouses have earned about the same amount their whole life. And so their retirement Social Security income is going to be almost identical. But in a lot of cases, that's not the case. Maybe someone was a home worker, or they stayed home, raised children. Their income benefits way lower than the high wage earner.
Right.
And in that case, as you know, all of your RICP training, your other training with Social Security, there is a huge amount of importance placed on deferring the higher income earners payment as long as you can, because Heather, what for our listeners who they've heard everything under the sun, they've heard it at church, they've heard it at small group, they've heard it at the coffee shop, they've heard it from TikTok, they've heard all kinds of information about Social Security. A lot of the times it's not true. What happens when one of the two spouses dies with Social Security? What happens?
Right. So when one of the two dies, the higher benefit remains.
Yes.
And so beyond that, right? So beyond that, I would say, well, time out. Why is he even considering filing? Because if he's a high income earner, we've already got one benefit that's taken permanently reduced, which is hers.
Yes.
And so why are we even considering doing that? Irrespective of the earnings test, it's going to even not make it possible, it sounds like. Let's walk through that, because we're already going to, if we didn't even have the earnings test, we're already going to be paying taxes, presumably. Probably 85% of her benefits are already going to be subject to taxes.
Right.
His is too. We're permanently reducing the benefits. And then let's look long term, because here we are, as you said, we're trying to create guaranteed sources of income in retirement. Let's play this out. The cost of living adjustments, which have been crazy, right? Obviously.
Yes.
They are now getting cost of living adjustments applied to a much smaller base too. So the longer you wait, too, your cost of living adjustment is being applied to a bigger benefit as well. So it sort of has a ripple effect in so many different ways. The survivor income for whomever survives the other, whether it's him or her. And certainly when you have a disparity in income benefits like that, people always say, Heather, what's your rule of thumb? And I say, I don't have one. I'm never going to say everyone should wait till 70, even though with average life expectancies being greater than ever.
Right.
That's the way it shakes out mathematically, that everyone should wait. But I always say, you know what, if I had one, it would be to hone in on the higher wage earner and have them wait as long as they possibly can. If we have to sacrifice one, then I would sacrifice the lower wage earner. If we want to have some Social Security income, then have that person go ahead and file. People say, hey, I want to go spend some money. I want to go, I get that. Then have the lower wage earner file.
Start the lower income and let the higher wage earner defer as long as you possibly can, because no matter who dies first, that is your lifetime pension income. Right. So it's critical to let that defer.
That's right.
There's so many questions and situations we could go into, and I wish we could talk to you for a lot longer. I want to do one more segment after we get finished with this commercial break. But folks, if you've been listening right now and you're thinking, boy, I need to talk to someone like that. I need to find someone who can help me with my Social Security planning. I've got all these questions about when to file, and maybe you're 62 and you were about to go in and file. Or here's something, maybe you did, and maybe it's been in the last 6 months and you're wondering whether or not you made a mistake. There's actually a window when you can revert back for 12 months and change if you've already filed. So you can only do it once, but these are the type of things that we specialize in. So call us anytime, 866-780-SAFE. That's 866-780-7233. We will do a free financial consultation. We'll take a look at your Social Security incoming and all other aspects of income, from 401ks and IRAs, whether or not you have a pension, whether or not you have an annuity with an income rider that's a guaranteed form of lifetime income. We'll take a look, and we'll do this free of charge to make sure you have the best retirement income plan in place. Call us anytime at 866-780-SAFE. I'll give you a copy of my best-selling book, Bulletproof, The Safe and Secure Retirement Income Plan, with foreword by America's IRA expert, Ed Slott. Number again is 866-780-SAFE. 7233, and there's always someone standing by to take your call. This is Brad Pistole, your host of Safe Money Radio. I'll be right back after this informative message.
Brad Pistole recently completed the Retirement Income Certified Professional course through the esteemed American College of Financial Services. This elite financial designation sets Brad apart as an expert when it comes to asset preservation and lifetime income planning. The RICP program focuses on key retirement decisions like building your retirement portfolio, evaluating the various retirement risks, choosing the appropriate strategies for turning assets into income, choosing the appropriate time to retire, helping clients maximize their Social Security, choosing the appropriate annuities for your retirement income plan, choosing the appropriate tax-compliant distributions from tax-deferred company plans, choosing the best Medicare health plans for the retiring client, choosing the best way to deal with long-term care in retirement, ethical issues in retirement income planning, and managing the appropriate strategies for taking lifetime income. If you're concerned about the safety of your money, and if you want to make sure you have guaranteed lifetime income you can never outlive, make sure you're working with a retirement income certified professional like Brad Pistole. For a free financial consultation, call us anytime at 866-780-SAFE. That's 866-780-7233. When you meet with Brad, he will give you a copy of his best-selling book, Bulletproof: The Safe and Secure Retirement Income Plan. That number again to call Brad is 866-780-SAFE. That's 866-780-7233. Now back to more Safe Money Radio with your host, Brad Pistole.
Welcome back. I'm Brad Pistole, your host of Safe Money Radio. I am a capital preservation and strategic income planning specialist working with clients right here in Springfield and Ozark, Missouri. Okay, Heather, last segment. You've been with us for a long time. You've been gracious. Thank you so much for being with us. I want to ask you this. With all your designations, your experience, you've been in business for 28 years. As a retirement income planning professional, you have had it pounded. As you mentioned Wade Pfau earlier, a great part of the RIC program. And he is going to constantly talk about the importance of guaranteed lifetime income in retirement. There's everything under the sun that we can choose from: stocks, bonds, mutual funds, CDs, putting it under our mattress, annuities, life insurance, like the whole gamut. And it can be overwhelming to a consumer. What in the world should I be doing? What, in your opinion, in all the different things that you do, what is the importance of having things in retirement that are guaranteed when it comes to income planning? Like Social Security is guaranteed. There are other things that are guaranteed. How important is it to go from a variable type product to something that's guaranteed once you hit retirement?
Well, I mean, in my opinion, certainly for what it's worth, I mean, I am very much of the mindset that I want, and I subscribe to it. I don't ever, say do this if I'm not doing it.
Sure.
I very much believe in having enough in guaranteed income that I don't have to worry, that I've sort of planned out. This is what I feel comfortable that I'm going to need, and then the other stuff, I'm comfortable to perhaps invest or whatever. But so I have set up, that is sort of how I have mine set up. So between Social Security, between my husband and I, and then I do have annuities. That is, and Wade, and I love him. I personally know him, have been on webinars with him, with the American College. I mean, I have a mad amount of respect for him and for Tom. Tom's a good friend too.
Sure.
I just believe that, most of us aren't lucky enough to have pensions. I mean, we are now in the age that we're responsible for creating our own pension-like sources of income. And so I don't know about you, I'm assuming that you are seeing that too. And so changing the mindset of people around annuity. I mean, I was one of those. I didn't know through the course of my career. I was like, I came in, I don't know, it's been 15, 20 years ago, going, what's an annuity?
Yeah.
All I
It's a
knew
4-letter
was
word,
the
right?
variable.
Yeah.
Huh?
It's a
When I was 4 years
four-letter word back in the day. And now
it was. And so it's taken me a long time, because I'm a conservative. I just feel like I want my income protected. So
Sure.
it's, I think it's just so important, especially the way the market rides. And, so yeah, I believe very heavily in certain types of annuities to make sure that I've got at least, I can go to bed at night
Yeah.
knowing that,
So
10 years from now when I'm 30.
that's right. That's right.
Yeah.
But you're older than
And
me.
when you're 70, because you just had a
I
birthday,
did.
your 60th birthday, just can't happy birthday.
Thank you. Thank you. Minus the birthday.
But yeah, I think it's a huge component is just really, and Social Security, it's a pension. I mean, it's an annuity.
It
It
is.
really, right? It is an annuity. And so you have to really look at and educate yourselves about, what it is.
I love it when Tom Hegna is talking to people and they'll say annuities. I hate annuities. He'll say, really, do you want to stop your Social Security check that comes in
Right.
every month? That's an annuity. Do you want to stop
Right.
your pension that comes in from your company? That's an annuity. Those are all
Right.
founded in annuity payments.
Right.
So,
Right.
and so it's either going to come from the federal government from Social Security, it's going to come from a company, or it's going to come from an insurance company. And that's where
Right.
you take control of your own assets. People don't realize this, but you can say, like, for instance, myself, I'm self-employed, and a lot of people don't know this. I think you know this. People that have read my book know this, but I was in full-time ministry from age 19 to age 36. And I'm one of the very few people that can do this. I opted out of Social Security at 19. Conscientious objector. I can be a better steward of that money than the government can. But if you don't go put that money back into something else, guess what? 19 to 36, what did I take? I took zeros in my Social Security.
Mhm.
So with you being a Social Security expert on the show with us today, guess what? I've done the math. When I started contributing at age 37, how long does Brad have to contribute to Social Security?
Yeah.
I'm not filing till age 70. I'll still
Right.
have 2 zeros on the record because
Yeah.
it's the top, tell everyone, the top how many years? The
35.
top 35 years. So why is an annuity or guaranteed lifetime income important to me? Well, I have zeros from age 19 to 36 in my Social Security bucket. And I could be a gajillionaire now, and I'm blessed to have great high income. I can't erase those zeros. So
Right.
I'm having to replace that with other types of guaranteed lifetime income. That's why I own 6 annuities, and they have income riders. And people don't realize, if they're listening right now or watching right now, your 401k can become a guaranteed source of lifetime income. Your IRA can become a guaranteed source of lifetime income. Your 403b, your TSP, your CD, the money that's in your mattress, anything can be turned into a guaranteed pension stream for the rest of your life. And so we want all of our listeners to focus on, especially what Heather said. I know I've interviewed Ed Slott, I've interviewed Tom Hegna, and now you just said it also. When it comes to guaranteed retirement income, you've got to make sure that your basic living expenses are covered. And those things have to be covered by either Social Security, a pension, or an annuity, because they're guaranteed to last forever. We've got to make sure that we have enough guaranteed forms of income to take care of all of our house payments, boat payments, insurance, that sort of thing. And that's why working with someone who is a Social Security expert is so critical, because they can help you maximize your income in retirement. Should you retire at 62 or 65? Should you wait till your full retirement age, which is full retirement age? It can be different for people, right? What's the range for full retirement age?
That's right. So people turning 62 this year, so born in 1960 or later, is now 67. So we're sort of getting into, now who's to say that they, with the legislative changes could start to increase the full retirement age even further. But those born 1955 to 1959 have a 66 plus 2 month sort of graduated scale, and those born 1954 or earlier, 66. So yeah, it can be. Everyone isn't the same. So you have to look at your your date of birth. But for those generally turning 62 from now on, or say 67 or later.
And that full retirement age is important because that is going to be their pension, their annuity payment. And if they file before that, take their benefit before their full retirement age, it's a reduced payment, correct?
Yes, it's a permanently reduced payment unless you change your mind, which we never got to. You withdraw your application.
You could.
Right.
You could withdraw your
You can do that.
application. So many different situations that we come across.
There are.
Someone loses a job at 62, so they trigger their Social Security benefit.
Right.
And then 1 year later, they didn't think this was going to happen, but they land a great job. And now they've got income coming in and they really don't need that payment. What do? Well, there's all kinds of situations and scenarios like that. And that's why, in my opinion, I have chosen to subscribe to and be connected to the people that are the best of the best of the best in the business. If you want to subscribe to Heather's information, you can go to Ed's website, irahelp.com, and go to the advisor section and click on that and subscribe. Heather, what's your personal website address?
Yep, it's HLS, like Larry, HLS Retirement Consulting.com, and it will also take you to the newsletter as well.
Fantastic. Well, Heather, I wish we could. I mean, I know when it comes to Social Security planning and income planning, we could talk about this forever.
I could talk about this for days.
Absolutely. So thank you so much for being on the show with us today. We will definitely have you back on again. And if you're listening right now and you want more information, more of Heather's information, or if you want a free financial consultation, maybe you heard something and you said, I'm not sure I filed the way I needed to, or I'm thinking about making some changes, you want to come in, just give us a call, 866-780-SAFE. That's 866-780-7233. When you come in, we will give you a copy of Bulletproof, the Safe and Secure Retirement Income Plan. That's exactly what we are talking about in the book that we're talking about on the show. We want to make sure your retirement income plan is safe, it's secure, it's going to last the rest of your life, and it's going to give your spouse and your family members the retirement benefit that they need in a maximized way. We all want as much income as we can possibly get, and we will show you how to do that. 866-780-7233. There's someone standing by right now to take your call. Guys, thank you so much for watching today. Thank you, Heather. We'll talk to you again soon.
Thanks.
Well, that's about all the time I have for Safe Money Radio this week. But before I go, I want you to know that I sleep at night knowing that my clients have retirement plans that remove the stress of market loss from the money they depend on for retirement. And I want you to sleep well at night too. Until next time and at the same time, I'm Brad Pistole, reminding you to stay safe so you can step into a secure future.
Save Money Radio, your money safe and sound.
You've been listening to Safe Money Radio with your host, Brad Pistole. Find out how to contractually guarantee that your hard-earned money is safe while avoiding market loss so you can have the retirement that you deserve. Call Brad Pistole now for your complimentary Safe Money book and Safe Money information kit at 866-780-SAFE. That's 866-780-7233.
Save Money Radio, your money safe and sound.
The preceding information does not represent tax, legal, or investment advice. Surrender charges apply to base annuity contracts. Optional lifetime income benefit riders are used to calculate lifetime payments only and are not available for cash surrender or a death benefit unless specified in the annuity contract. The tax consequences of annuity income should be considered with the help of a licensed tax professional. Listeners should be aware of IRS penalties for withdrawing funds from an annuity before age 59 and a half. Fees may apply. Annuity guarantees are based on the insurance company's financial strength and claims-paying ability. No information presented today should be acted upon without meeting with a qualified licensed professional. Obviously, by calling us now, you are taking just the first step towards protecting your retirement. It is important that you read all insurance contract disclosures carefully before making a purchase decision. Rates and returns mentioned on this program may vary based on state availability and are subject to change without notice.